What's up, you guys? All right, well, today is a red day recap, and I shut everything down because I was like, I don't even want to look at charts again. I'm frustrated. I'm red on 3 out of the 3 stocks I traded, which is not good. I'm down on the day, not at my max loss, but it's a good size red day. So I shut everything down. I'm going to bring it back up here to do a quick recap, and then I'm going to shut it down again, and I'm not going to look at charts for the rest of the day. This is a strategy of trying to kind of de-escalate when emotions sort of rise up. Because for me today, so for instance, I started early this morning. I sat down early, was looking at the market, and it was not a good gap scan, just like yesterday. But the S&P 500 was dropping pretty hard, and I started thinking, okay, maybe there's an opportunity to trade the overall market. So at the open, I hadn't taken any trades pre-market, but at the open, the S&P comes up to VWAP, and I shorted against the volume weighted average price, and it drops down, and then it whips up through the VWAP, and I lose $7,000 right away on that first trade. And you know, it was like, wow, that was quick. And the market can move fast, and so immediately got myself into the red on SQQQ, which was trading. It goes up if the market goes down. So kind of dug myself a hole on that of 7,400, which felt sort of unnecessary. Now that the charts are up, I can show you the screen. So S&P 500 at the open, you know, I mean, it's just so stupid, but whatever. So the market had sold off. Coming into the open, we were right underneath the volume weighted average price. And I was like, okay, it tests the VWAP at the open on this green candle, and then it starts to roll over. So I got short right away. And if we look at the 10-second chart, you'll see how it started to dip. And I was like, okay, right, it's right off the VWAP, we're dipping. And then it just rips through. And so right there, I lost $7,000. All right, so then it drops down, and I would have been up $7,000 if I had held, but because it ended up breaking VWAP, but then rolling over, going way back down here, I would have been up 7,000, but I didn't hold. And then I saw it come back over VWAP, and right here around just under 400, I was like, okay, maybe I should go back long the market. And I was like, you know what, dude, don't do it. Like, the whole bias that I had was a short bias, break a VWAP, roll over, and possible capitulation, selling off through yesterday's low. And so when we didn't get that, that doesn't mean I should flip and just go long, because I don't want to be trading the market unless it's going crazy. And the market today, you know, yeah, it's bouncing off the low, but it's not doing anything crazy. So anyways, I could have gone long here and made a little bit, but whatever. So I didn't do that. So the problem today is that I kind of broke the ice with my first trade, and I went deep into the red, right? I got, you know, $7,000 is it's a good size loss. So then I was a little bit more likely to jump into the next stock that started to pop up, which was BWV. So BWV starts popping up, and I took 2 trades on it. The first trade was at $6 right here, which was a $65 winner. Stupid. It sells off, then it comes back up, false breakout there. I didn't trade it there. It goes higher, and I finally got in it. It was actually right in here as it started to pull away, and it pops up to 75, or it pops up to 60, and there was a big seller, and I was like, you know what? The second I get in, there's a big seller. Forget it. I'm bailing out. So I bailed out, took $1,000, $1,200 loss on it, and it ends up going a little higher, but whatever. And then there was RDBX, which had news out this morning of a merger buyout with Chicken Soup. CSSE is the stock. And, you know, this thing, I just was like, I don't know. It's weird. It's dropping down 50%, and it ended up rallying back up. And, you know, me, of course, I managed to lose money on it. So I just wasn't dialed in. I didn't trade it early on. I was like, I don't trust it. I tried to buy at 5.15, and this gave me big FOMO because I tried to buy 20,000 shares at 5.15. My order didn't fill, and it goes right to 5.68. That could have been a $10,000 winner, and just like that, today's a small green day recap. It then resumes, and I tried to buy the dip here at 5.50, $0.50 support, and it pops up for a second. I was looking for the curl back through 6. It ends up flushing. I didn't get caught in the halt down, but I sold and lost $3,000 on that. And I was like, you know what? All right, that's it. You're red on 3 out of 3. You're down $11,700. Throw in the towel. You're done. So, and this all goes back. Like, what did I just literally say yesterday? Have the discipline and patience not to trade. And then look at me, schmuck that I am. I'm over here trading these, trading the overall market, which is, I took too much risk on that trade, lost too much money. Then this stock drops 50%, then rallies back up. I managed to lose on it. BWB, low relative volume. Desperation started to set in, right? And frustration started to set in. And it all stems back to that sort of first trade that went wrong. It's good to branch out. And I have had days where I've traded the overall market when the overall market is doing something really extreme, which I thought it might do because we had the CPI numbers this morning. It was sold off, came back up to the VWAP, and I thought we were going to roll over again. So, I was wrong, but I took too much risk on that trade, and I didn't think I was risking that much, but all of a sudden, when we got that swing, like I was down and it was, whoa, okay, that's not good. So now I'm down on the week 10 grand, right? I was up 1,000 Monday and 700 yesterday. So down 11,700 today. So I'm down 10 grand on the week. And it's my first red day of the month. So, I'm a little annoyed. And it was totally avoidable. This should have been a no trade day, really. RDBX, maybe I should have jumped on it sooner, but it's a weird setup. That sell off on the news and then the rally back up. It's a weird setup. It's not my go-to setup by any means. So I probably shouldn't have traded that one at all. And maybe I would have been okay with not trading it at all had I not been already down 7,000. But here's a problem. And let's talk about this for a second, because this is something that came up during a Q&A session I hosted yesterday. That question, Ross, I tend to hold my losers too long and I sell my winners too soon. Why am I doing it? And the whole thing is that it's a fear-based action. You get scared that a small winner is going to disappear, and so when you have that fear, the way to resolve that emotion is to eliminate the fear. So how do you eliminate the fear that the small winner is going to go away? The action is to sell immediately. That way you don't have the fear anymore. You book the small winner. So you take an action that's driven by this emotion of fear, and the result is that your winners are small. Now on the flip side, you get into a losing trade and it starts selling off, and you're afraid that it's going to be a loss. Now, until you press the sell button, there's always hope that it could rally back up. And so your fear of losing actually results in an action of holding the loser longer, because until you press the sell button, there's always hope that it'll turn around. And that's how you get big losers and small winners. So if you're trading from an emotional perspective where your decisions are based on this emotion of fear, you're going to find that you're holding losers too long and your winners are small. You're selling them too soon. And so the way to kind of move away from that emotionally reactive trading, number one, scaling down. So like today, I went with 9,000 shares on my first trade and dug myself $1 a share hold, just about 7,000 bucks. That was too much size. I shouldn't have gone that big. That was too big. And I went in real quick and it was somewhat impulse, but it was too big of a trade. So scaling down, because when you start trading with big size, the emotions get bigger for sure. And this isn't really the best market to be doing that in. So size down. And you can scale up over time, but size down, trade with smaller size, and try to just focus on actually following the rule of your strategy. I mean, it's hard enough even trading with just normal size to follow the rules. So when you're trading with size that's too big, it's even harder. So during this kind of market that's bearish, where you're struggling a little bit, size down. And I did look for opportunities to the short side today. I tried to trade the market to the short side and I lost. RDBX, BWV, neither of them I really looked at too much on the short side. There was a couple others I was looking at, but I just didn't see the setup. So anyways, that's it for me today. Just gonna shut it down here, let it be what it is. It's a red day. So breaking the ice with my first red day of the month. Now that it's under my belt, I can just, whatever. Sometimes I get into this mindset of like, maybe this will be a month where I don't have a single red day. Like, it doesn't even matter. It's like being in a marathon and you're just trying to, it's like, it's so not the point. Being in a marathon and running and being like, I'm gonna try to do this like leg of the race without stepping on a single crack in the pavement. Like, what? Like, it doesn't matter. What are you doing? You're being stupid. So stop thinking about it like that. You're totally getting yourself, next thing you know, you try to step over a crack and you fall and twist your ankle and you're out of the race. And someone's like, what happened? I was trying not to step on a crack. And they're like, wow, you're an idiot. So that's kind of how I feel with my trading today. But anyways, whatever, it is what it is. I'll be back at it tomorrow. You have to just brush it off. I mean, this is part of being a trader. You have to be resilient. You have to be able to shake it off, come back. You're going to get knocked down. If you get yourself so bent out of shape every time you lose that you're, in tears and you're crying, this isn't for you. And listen, I know that there's people out there that cannot stand. They're so torn by loss. And on the spectrum of torn by loss or have no care whatever, the people that have no care whatever are the people that could be very reckless potentially with money because they just don't care. And that's, I don't think, the good spot to be either. So you got to be somewhere probably in the middle. I'm actually probably more on the side if I get more torn by the loss than I wish I did. I wish I could just like not care at all, but in reality, not caring at all actually wouldn't be good. So you have to be somewhere in the middle. But if you don't like where you're at, be mindful of it, develop that awareness, and start thinking about how can I bring the emotion down a little bit. All right, hope this has been helpful. Red Day recap, first of the month, first in a couple weeks now, but that's okay. It was bound to happen, so here it is. Thank you for tuning in. I hope you hit the thumbs up, and if you want to watch a couple more Red Day recaps, there's a doozy right here. $275,000 in one day. Worst day of my entire career. That right there. And what should I put down here? I'll put another video down here. I'll think of it in a second, but check it out if you're interested in watching a couple more videos, and I'll see you guys back at first thing tomorrow morning. And remember, as always, hold up, my trades are, my results are risky. My results are, I don't suppose they're so risky, but they're not typical, is what I was trying to say. So take it slow. And don't blindly follow me, and trade in a simulator before you put real money on the line. All right, check out those two videos right up there, and I'll see you guys first thing tomorrow morning.